Vincenzo's Gold Crypto Investing, a quick update this evening as we take a look at the Bitcoin. We're going to get right on into this on this chilly 30-something degree evening, going down to the mid-20s, probably 27, 28 by the time I wake up in the greater Bloomington metropolitan area in central Illinois, right? Another chilly morning on tap on this early November, late fall day or night on this increasingly dark and scary and chilly and frosty evening, right? As I smoke a little hashish and bota. Oh yeah, that's the good shit right now, right? A little hashish and a mota. No yayo, just mota. But as we zoom on out now, let's go on to the yearly time frame. We got to zoom out of here a little bit more. There we go. Let's get to the far out time frame. Look how beautiful that looks. So what we got going on here when we dive down deep into this is we got a big top here in that topping pattern. That's how we call this big crash. I thought it would come up to here. Honestly, I didn't think it would come up to here yet. I thought we had to come back down first, but obviously that's not the case. Now, if you're looking at Bitcoin, this looks like with our drawing tool, it looks like we should be having some kind of topping pattern there, right? And I think we are. I think this, I've been saying and harping on this green ring that's up here. You see it right there? That's going to knock this down. I still think it is. I have this horizontal line on there, and that's the top of the last hit, right? But you can see when we set a $74,000 target, when the price broke out past here, no, it was in 60s. When it broke out past 60, and we said you could go up to 74, we had a target up here, or right in here, on an overshot of this ring, right? And we never overshot it, but we came right up to that green ring. We haven't changed this chart, right? We haven't done anything with it. These things that are on here, these rings have been on here for quite some time, and you can see we came right up to that with our drawing tool. Come here. And it hit, we're almost right onto that ring. You see that? We had that wick. If we zoom on in here, in a super simple, easy way to trade this market, right? You can see when we pull in, we hit almost with that wick, almost touched it right there, and then we got rejected, right? And then we came down to a moving average there in a shorter time frame. And now I still think we're coming down to 53,000, but the other day when we were talking after we bought off this wick, and as we were staying in this channel, even early on when we were just kind of swooping down and having a rounding bottom, if you notice that, see that? Hey, you're coming down, you're just kind of having a rounding bottom. When we were in here, I was telling you that I could see how you could come back up to this major resistance right there. It actually should be a little bit higher at the top of this candle body, right? That's where it should actually be. We want it at the top of the candle body right there, a little bit lower. When we were talking about this, let's bring our drawing tool, or let's bring our pointer tool back. Not a drawing tool, I like our drawing tool. But as we were rounding this bottom, I was saying that it could swoop back up because it's got that rounding bottom and come make a run back up and retest this major only overhead resistance until you're in price discovery and you can go up as high as you want. And that's why I did have a $74,000 target out there, because I still see this consolidating down, right? You got your horizontal resistance and you're kind of trading within this box. And if it continues to trade like that and then comes back down and then starts to come back up, you could say you're trading in a sort of a bull flag, right? Where you got your flag, right? You're trading within that. And then you got your pole down there, right? But we're going to keep an eye on this. We had a big wick there, and then it got bought back up. So if we zoom in on here in a super simple, easy way to delete that line and sidestep and audible the criminal gangster cartel in this manipulated market, right? The market. That's what I would pay attention for. You're trading within the support and resistance. Like we went over, I'd pay attention for if you break this support line down here in the 200-day and the support line. This is a target But if you can break up and you don't just form a glowing, gorgeous, all jabroni enticing double top right there where you swing around the backside and come up, see that? And then you double top and you come on back down and then start trading, and it ends up leading its way down, right? That's your scenario. That's your most plausible scenario right now. After you see this, as you rounded, is you start to fight your way back up and you double top, and then you come back, and that's how you get down to that $53,000 target. That's what I'm going to be watching for. I'll keep you updated on the Bitcoin to see how that progresses. If we go into the Dogecoin, you can see we had a nice pump up there, hit that green ring. That's been acting as resistance a lot. Look at this messy pattern we got going on here. That's my moving average. Never mind. So if we zoom on over here, delete that. There, that takes it off. Then we delete that. Come on over here. So the Doge, this green, is this a ring or is this no, that's just the overhead resistance. That's been acting as resistance a lot. Right, we're going to get rid of these. This was our Fibonacci retracement. Let's pull this ring out. We're going to go from the top. Bottom. There we go. We're going to use this Fibonacci Fib channel, and then we're going to lock it. And then I don't like that color. I think the green stands out better, nicer. And then we can take that. That's actually pretty good. You can see then if we're using that Fib circle, we hit this ring, came down. A lot of support on this bottom ring. So when you come back down here, that's a lot of support on that bottom ring, right? And that's going from a high point to a low point. Then you can see these rings on the top end act as resistance. And then it beats it down. Support. Come here, God. What's your deal? You can see this. Sorry, the cat is out here traveling on the road with me in the hotel, and he's not really liking it. You can see it hit this, support, then it hits it on the other side, resistance, support, comes back up, support, comes back up, resistance. See this? When it comes up and hits these rings, it acts as resistance. Then it hits the ring at the bottom, support, comes back up, resistance. See how that's playing out? As soon as you enter the ring, on the inside of the ring acts as resistance. And when it hits it underneath, support, support 2, support 3, support 4. See that? Then you hit the ring on the upper when you're coming up on it, and it's resistance. Look at this. Resistance once. A whole conglomerate of resistance once. Resistance twice. Resistance 3 times on a wick, and then finally it broke up, right? And just had a huge bull run right there and broke up through all these, but then came right up to a ring and got resistance. So on your way up, these are your resistance points. On the way down, they're your support points. And now, right now, see how super simple and easy this is when using technical trading setups and using the super simple tools that a site like TradingView gives you to get that technical chart set up, and then just start playing the technicals and take the guesswork out of it, and you play what the chart's giving you, right? You read the chart and play it. We need to zoom out here, not in the 5-minute. We need to be at least a 3-hour time frame. There we go. Then we can zoom on in here, see what we got going on, and we'll get rid of this over there. And now you can see what I'm talking about. Let's pull our industry exclusive perching tool out. We're going to perch from the center of this. Oops. And you can see you hit the top. You see as you're coming through the ring, this is where you finally broke out of it after getting rejected off this 0.786 retracement level 4 times. You come up, and now each ring up is a resistance point. You did see that it hit it as resistance at the 0.618 level and came back down to the 0.78 and back tested it and held it as support. Came back up, slightly got rejected, and then blew through it. This one, same thing, came about up to it, slight consolidation, then blew through it. Then you got up to the 0.382 level. See that 0.382, 0.618, 0.786. Then you got topped out, and then you came back down real quick and used the 0.5 as support, came back up, used the 0.382 again as resistance, and then broke through that 0.5 Fibonacci, then came all the way back up and used again the 0.38, like right here, right now, and right here, higher, high, lower high, all using the same point as resistance, and then he traded, look at that, right back to the 0.618. See how you're using him as support and resistance? Then even on the flash crash here, see that? He wicked all the way down to the 0.718. So now you're trading down and you say, well, what the fuck does this mean to me, Vincenzo? Well, now as you branch your way out, right? As you've started working your way this way, you broke through it now, then you came up and hit it as resistance. So now you know this is resistance. Came up, fake out, came back down, resistance, resistance. Then you had a huge fake out, hit a trend line up here and got rejected and blew right back through that level and traded down. So you know, if you break down your next underneath target, and a super simple, easy way to trade this manipulated market using the technical trading chart and the tools that TradingView gives you, you're going to put a price note, and you know this is your major underneath support, 23 cents, right? And then your overhead resistance is on this ring above you, obviously up here. See that? At 30 cents. That's your overhead resistance, your underneath support. So that's how I would be watching this. To trade this right now would be, come here, hey, come on up here. Would be to trade between these rings, right? Right here. And if you broke this ring, your next spot would be up in these rings as resistance or your support. But what I think you're going to do is you're going to be trading within these two rings right now until you finally get topped out and get squeezed out of this trading area, because this, to me, is the trading area that you're in. You're going to be trading on this resistance line right here, and then you're going to be trading on this green ring right here as support, resistance when you hit it, resistance up here, right? That's the trading box you're forming in right now within this green ring and that overhead trend line. And I think you're going to work your way and squeeze your way through here and then ultimately bleed out. But we'll keep an eye on that in case you wick up like this again, because those are always possible throughout this. Just like since here, back in August, the pattern's been down, but you've had wicks up along the way, right? Got supported off the 0.618, pumped up, got rejected off the 0.50, then dumped right to the 786 level, and then came back up and got rejected off the 0.618 ring, then dumped, found some support on the 0.786 again, then dumped through it, then came back up and got bought back up and got rejected by the 786, then dumped, and then got supported by the moving average and pumped and overshot and a fake out, but got rejected again by the 786 and then dumped, and then traded sideways on the moving average and pumped, got rejected by the 786 again, then dumped, then came back up and got rejected by the 786 and dumped, hit the moving average and overshot on a big fake out, but got rejected again and dumped, right? So you're playing these rings, and that's how you play this pattern. And I think this is the pattern that you're going into, or that you're in, where you have this green ring up here, that's overhead resistance. Then you got this blue arrow, but it's a green, it's a overhead resistance line right here, which we can make look a little bit better right now. We'll get rid of that. We'll get rid of that, and we're going to make this green, or blue, right there. At your overhead resistance, that green ring at the 786 Fibonacci is overhead resistance, and the 100% retracement is your support, right? So that's what you're trading in, and the Dogecoin, the fucking Dogecoin. Now as we're moving along here, we'll take a look at some shit we ain't looked at in a while. People seem to, I'll talk about the XLM. I haven't talked about the XLM in a minute. We'll start out zooming on out in the far out time frame, and this chart's all fucked up. All kinds of shit on here right now. We're gonna start over We're gonna get some of this shit out of here. Get rid of that. Get rid of the volume indicator for now because we already have it marked. We're just gonna clean up this chart and make it gorgeous so that we can see what's actually going on here in the market. So what we're gonna do is we're gonna take a fib circle and we're gonna go from essentially could we use that a low to a high? I think we could. Let's take a look at that. I like these candle bodies. So we'll use that candle body right there. And then we'll go to its swing low right there. And then we'll lock that. And then we'll see if we can't diagnose, sniff out, and detect anything in here, right? Now as we zoom on into a closer time frame, I'll log that. So you can see here now if we look at this, again, the rings start acting as resistance and support, right? So if we take a look at this and get this, that's where our major volume is. So we want to keep that. Where's this popping up at? Come on. Come on now. Ah, come on. That's our major volume support range right there. So now if you take a look at what's going on here, is we're going to pull our drawing tool out, and you can see as we're working our way up into this ring, they start acting as support and resistance. So let's zoom on in here to the local time frame. Oops, get rid of that. Get rid of that. Alright, so you can see here, and then we're going to work our way out of this video, but you can see what you got going on, y'all. As you can see, on the way down, hit the ring on 2 wicks there as support, right? What we need to do is make this a little bit smaller. There we go. You can see after this huge dump, it blew through all these rings and then twice hit that green ring beautifully, right? And got bought back up and got rejected by that ring. Came back down, hit support on this ring. Came back up, got rejected off the same ring. Crashed, got supported in the same vicinity as that ring, and then ultimately broke it and came right back down to that ring underneath. Got pumped up, got rejected by the volume because that's where our volume indicator is in that yellow box. Then got rejected, got double bottom supported at this same ring again, and that catapulted it up. Slight rejection at the ring and then blew through it. Slight rejection if you zoom in with them wicks and then blew through it. And then ultimately got locally topped out and dumped through the next ring down to the second ring, got supported by the moving averages, got bought back up, got rejected by that same ring, came back down, got supported on the underneath ring, and then blew straight through that ring all the way up and got topped out. Right? See how they're holding the rings as support and resistance, and we blew back by through that ring, failed it, failed the second ring, but slight support, whipped all the way down to this ring, and got supported and got bought back up. Right, got rejected by the moving averages and then came down and got supported along this ring right here. And as the ring was about to either have to trade out into here or trade down to the next ring, it said nope, we're going to trade out to the next ring. Got had some resistance on it and then broke through it and came up, got some resistance on it, failed it, came back down to the underneath ring in the moving averages, got bought back up to current price and is getting resistance again. So in a layman's terms, these rings help you see support and resistance zones, right? That's all it is, and that's how you play it. So your next ring up here, there's your upper resistance now, is 42 cents, and we've had a 42-cent target, and there it is right there. It's actually 46 cents. We'll move it along here because we had our ring there, but we reset the rings up, deleted it, but that is why that is up there. And because we think there's a top end potential there because we have a ring here and a ring here, right? And then if you say, well, where the fuck would my underneath support be? Well, your first one would be this ring right here that you just broke off of at 33.6 cents, right? And then if you broke that within the same time frame by, say, December 1st, or even all the way out December 15th, your support is this underneath ring down here. The same ring is here, but the bottom side of the ring, right? See how that works? And then as you trade your way out, if you break this ring, your next level of support in the future underneath that would be right here at this ring at 19 cents. And then out into the future, even more, would be at this ring at 14 cents, right? See how that works? Those are your underneath targets for where buyers should or could be on the way down. And the same thing on the way up. These are your overhead resistance, and that's why I've had this one up here. But on this chart, the ring's about a penny and a half higher, right? Because it's on the ring. And then if you were to break that one, your next major overhead resistance is up here at 62 cents, and which be obviously major resistance, right? See how that works? That's how super simple and easy it is with the rings, and then we throw on the chart, or we throw on the lines after once we start identifying patterns. Like right here, you can see this, to me, looks like a topping pattern, a big double top coming here, right? And so that's what I'd be paying attention for. Can it get above here and come up to 42 cents, or does it get rejected on this ring and start dancing like this, right? Does it start doing something like that and dances on the ring, and then it comes down here, and then it comes down to the underneath target and makes that third bottom, second right there, and then third right there on that same local area, right? And that would look like a big topping reversal pattern. And then maybe this price could start moving back up after you play that double top and then touch the ring and come back down and fulfill that underneath buyers down there, or the sellers that were there. But that's what I'm looking at. I'm rambling on, so I'm going to let you go. Like, subscribe, and share to Vincenzo's Go Crypto Investing as we march our way steadily towards 1,000 subscribers. Thanks to the loving, glowing support from you, yes you, the beautiful audience, as we grow and continue to learn and continue to fleece, heist, and shist, and overt and sovert, the soverters and overters, the Ohio State University, brother. Graduates that have infiltrated the trading markets and the Federal Reserve and the United States government in order to knock down the retail trader and beat them into a state of submission. But oh no, not here, not at Vincenzo's Go Crypto Investing, where we sidestep Audible and walk away with all the fucking money after we fleece, heist, and shist the charlatans, the YouTube hustlers, and the snake oil salesmen, and fleece heisters and shysters. And we fleece, heist, and shiest them. Hit that subscribe button, that bell notification as we march our way towards that 1,000 subscribers. And that's the only thing between us and monetization and spreading the word and getting a bigger audience. Peace and love. Peace and love, audience.